Voilà. Bonjour.
Good afternoon, one and all. I'll wait for there to be quiet in the room again. I know that everybody's getting a little bit hungry, so we'll try to stick to our 40 minutes speaking time. So, of course, we'll keep talking about war risk since the return of high-intensity conflict. War risk has become central again in maritime and aviation cover. How is this risk discussed and covered? What is the case law situation? We'll start with three of you. First, Frédéric Denefle, Chairman of IUMI, the International Union of Maritime Insurance. Everybody knows you also because you're the CEO of Garex, which insures against war risk in shipping and transport. Also with us, Béatrice Bray. You're British. You're a lawyer specializing in shipping litigation for HFW based in London, with long experience in the management of complex litigation involving several jurisdictions. And Christophe Grabert, you are chairman and CEO of La Réunion Aérienne. Everybody knows you, and you are offering aviation and space insurance solutions. We'll take a quick overview of the market for war risk with you. Frédéric, what is the current situation for the shipping market? Well, thank you so much for this introduction. When we prepared our discussion, we didn't assume what would happen this weekend in Iran. Although the topic had been on the table for a bit, we couldn't imagine that things would accelerate that quickly. The uncertainty that there is now in Iran when it comes to maritime shipping going through the Strait of Hormuz, all that is coming after several crises, successive crises that I'll remind you of so that you become aware of how regularly the conflict situation that we're now facing in maritime situation happens. First, we had the Black Sea in 2020 with the blockade of Ukrainian ports after the invasion of the Ukrainian territory by Russia. Then we had issues related to the conflict between Israel and Hamas, with transit difficulties because of the threat of the Houthi rebellion in the Red Sea. Now we've got the Strait of Hormuz and also other foci of tension that could impact maritime transport in other parts of the Red Sea, Ethiopia, or other neighboring countries on the Red Sea, like Somalia, which are recurring hotspots of tension for maritime shipping and transport overall. So maritime insurance now is facing those successive risks. This is a matter of intensity. It's not a matter of recurrence, but unfortunately, this problem is not finding any solution. Ukraine 2022, the war is still going on. The conflict between Hamas and Israel had repercussions over the Red Sea. It started almost 2 years ago now, and the Strait of Hormuz, which is under tension, and it's also the outcome of the crisis accelerating, but that started a very long time ago. So the overview is now establishing war risk in the shipping and the transport really at the center of the chessboard when it comes to risk. Christophe Grimbert, when it comes to covering war risk in aviation, because you're specializing in aviation both for the French and international market, what is the impact of those nascent conflicts on premiums, exclusions, and also renewal conditions? Well, a lot of similarities with the maritime market. The difference, as you'll have understood, is that geography doesn't matter that much. We've got a bit more room in the sky to move around, whereas in maritime, you have to go through some places that can be narrow or risky. But a lot of similarities nonetheless. Now, the phenomenon is that there's high intensity but low frequency. Fortunately, for potential passengers, namely us, because a lot of us have to take the plane now, roughly, well, over 4 billion passengers every year on the planet. So we can see that a lot of people fly. The rationale is rather about analyzing slightly different risk, but still with a strong correlation with these international phenomena. And that changes routes, that changes journeys, also airfares, that changes the cost of insurance. To give you a price range, that was one of your questions a few years ago, the global war risk market for aviation was about $100 million in premiums. That was nothing. Now it's $1 billion. So a range of 1 to 10. And 1 billion was a price that went around. It's still vaguely going around before the legal resolution of the conflict in Ukraine between lessors. And I mean, my neighbor is going to talk about that more. It's a big loss. So a strong price intensity. The market, of course, is very careful about the situation and insurance conditions now. A single spark can block all of global traffic if there was to be a nuclear detonation somewhere. We were close to that, I think, last weekend. But if there was nuclear detonation somewhere, all planes in the world would be immediately grounded, because there are clauses. So you need to replenish capacities, and so we'll end up in the same situation as during COVID or after 9/11. So at first, nothing will happen. Insurers tried in their own way, because you can see this goes beyond what a single company can do with its own share capital, although they are very powerful. Maybe these are issues that have to do with huge capacities, and risk analysis is beyond the abilities of a single company. So we'll need to replenish capacities so that all planes in the world can start flying again. The market exists right now. The price shifts have been big, and there's still fragility between supply and demand, and it will depend on what's going on. But so far, we've always been there for our clients, and this is what you need to take home in the audience. Insurance need to keep mobilizing to be there for their clients. Thank you. I will now give the floor to you, Beatrice. Could you tell us more about the contract approach of the English market?
I do apologize. I will be speaking in English, but I will try to speak as slowly as possible. So the English market is quite different from the French market in that we write a lot of business through Lloyd's of London, which I'm sure a lot of you in the audience will be familiar with. The way it works is that members write business in groups called syndicates, and they'll appoint a managing agent who will carry out the underwriting on their behalf. Since it was established in the late 17th century, the market has developed a very strong reputation for bespoke insurance solutions, and that is why a lot of war risks insurance in the UK goes through Lloyd's, is because it has a very big underwriting capacity with the risks being shared between multiple insurers who have access to the Lloyd's Central Fund. So in the event that there is a valid claim by a policyholder, then an insurer cannot pay out that claim for various reasons, such as insolvency, for example, they will have access to the central fund, which gives the policyholder a lot of reassurance. So in that sense, the UK is quite a unique and good place to write war risk insurance. And how that insurance is written is that typically it will be excluded from a policy. War cover will not usually be included at all. And then inclusions can war clauses or specific war policies can then be brought back by the policyholder. These clauses are usually on a named perils basis. So, for example, the Institute War and Strikes clauses explicitly cover things like detention, seizure, and arrest. But even still, there are some exclusions to those war clauses. And I guess, drawing on what my neighbours just said, one of the key ones, for example, in marine insurance in the Institute War and Strikes clauses is excluding losses arising from the detonation of a nuclear weapon. Now, we would all hope we will never see this come into play, but it's important to continue to look at these clauses and how they're operating in the market, especially given how much of these risks are subject to English law and subject to these clauses. They're also quite unique in that in English law we have the held covered provisions, which stipulate that if there's certain breaches of warranty by an assured, and they notify their insurer very promptly, then it can be open to the insurer to impose an additional premium for that assured, and they will continue to be held covered despite the fact they have breached, say, for example, a navigation provision that restricts them from going to a certain area. So the UK market is very interesting, it's very unique, but it's also employed so widely across the market, across both aviation and marine, so it's very important to understand it.
Indeed, it's very important to understand it. And to what extent? That's a question I hadn't necessarily prepared, but to what extent is the UK market representative? What is its share of contracts in the world, Frederick? Well, that's a question that is very difficult to answer, almost impossible, for a simple reason. We do not have any distinctive statistics allowing us to identify premiums paid for war risk insurance. Nobody in the international community of maritime insurers, nobody agreed on common standards to identify and monitor premiums that are paid for war risk insurance. Similarly, we don't have any statistics that help us identify the number of losses or claims that are paid because of war risk or for a policy that covers war risk. So it's very difficult to talk about the respective weight of everybody when it comes to war risk insurance. However, although there's an uncertainty on the figures, there's certainty in terms of practices and professional standards. The certainty is that when you talk about score insurance against war risk, for ships, we know that the British standards, the London market standards that are used to define the insurance conditions when it comes to maritime transit, when it comes to dangerous areas as well. So the London market specialists, the UK market specialists with whom we are in contact, identify the dangerous areas in which ship owners should be extremely cautious and for which they need to specifically liaise with their war risk insurers before they go into these areas, before they organize a voyage. If they don't do so, they won't get the benefit of their war risk cover in principle. So on the one hand, there's uncertainty about the figures, uncertainty about the effective weight of the UK market, although from my perspective, it's probably very big, but there's certainty about the fact that we're using UK contractual standards to define the content of our clauses and the content of our commitments vis-a-vis ship owners. I'm talking about ship owners, not loaders. It's a different world and it obeys other contractual standards. And yes, that will be covered by another conference. Frédéric Deneflé, Christophe Grambert, please tell me what are the limitations you face when it comes to setting up war risk insurance. Christophe, let's start with you. Limitations. Well, we've got a few figures that are a bit more precise. I'll echo quickly what you said, the share of the UK market versus the rest of the world, so to speak. I gave you a few figures. We're a bit more precise. We don't have very precise figures because there's a part of war risk that's embedded in ordinary risk policies. I won't get too technical, but it's difficult to segment that. But we've got additional capacities that are bought. So only identify those. You could say that the UK market in its entirety, insurers, reinsurers, Lloyd's syndicates, companies, it accounts for 80 to 90% of global capacity for war risk. So we should start thinking about that. We're at Parimat, and so maybe that would be a wake-up call for us. But maybe we'll be able someday to also contribute, because this is a market that's ahead of us. Ordinary risk on, well, that's 10 to 20% that's covered by the UK. So you can see that the proportions are completely reversed. This is a very sophisticated market in the way all the clauses are built, how they're used, and legal models, regulation of claims. Everything is done in this environment, and the rest of the world, including the French market, will then align on that. Now, the limitations are related to physical and economic limitations set by companies now. But I'm still convinced that with what's going on, that will open up a new market. It's up to us to see whether we are going to bury our head in the sand as we like to do, or if that's going to be an opportunity for us to build additional capacities. Because our customers, our policyholders, the brokers of our policyholders, for sure, are going to knock on our door even more to try and build solutions. And so this is not about mere sponsorship. We need to set prices. We need to handle claims. We need to underwrite. But quite obviously now, the economic world should adapt to these new needs rather than letting the political world do that for us. Because if nobody does that, eventually there will be theoretical committees in ministries deciding that, and that will mean more taxes for me. So I'd rather do that myself. At least that's clear. Frédéric Denefle, in terms of limitations, do you share Christophe's observation about physical limitations and economic limitations? Well, first, there are limitations related to the risk per se. There are things that we can't do in wartime. If you look at the origins of the conflict between Ukraine and Russia, remember these experiences precisely. The first thing that was decided respectively by both countries was to ban entry into Ukraine territory by maritime ships. There was a ban on the entry of ships on the Ukrainian maritime territory. And that's a prohibition, a ban. That's a situation that protagonists are trying to find to protect their territory, at least that Ukraine tried to use to protect its territory, whereas the other party wanted to restrict aid to Ukraine. Well, ensuring anything in such a context, of course, that's going to be impossible. The second thing that, of course, there are limitations on is some type of transport of operations. We're not going to insure against war risk for the transport of military equipment via maritime routes. In such a case, of course, we'll self-impose limitations and remind all protagonists, all clients who might approach us, how significantly sensitive such an operation is in a risky area. And finally, assuming that there are no prohibitions and the goods are not risky per se, we're going to look at the possibilities of protecting the convoy, protecting transit. We have long experience in maritime insurance in terms of ship protection against war risk off the coast of Somalia over the period 2000 to 2010, 2011, when there was a resurgence of piracy, which was considered as war risk back then. And so in this case, European military forces with the British, and to a lesser extent with logistical support from the US, set up prevention and protection systems to finally allow armed guards on board. So in the Gulf of Aden with armed guards on board. Yes, and now we're in a situation where everything that goes through the Red Sea could be insured against war risk, so that the Lespides European forces were there to protect convoys and maritime expeditions. Otherwise, you wouldn't go there? Well, you could still go there, but you'll do that with even more careful conditions, with a deep analysis of the risk. It's something that would be particularly random. Still, for the both of you, are there situations that are impossible to insure in aviation? Well, now the way contracts are written, it's well, you can have exclusions and then buy back these exclusions. The only thing that's never bought back is nuclear risk as such. So, as I said earlier, so that you don't confuse the two, if an atomic bomb goes off somewhere, all planes are going to be grounded, but that doesn't mean that we would cover nuclear detonations or the consequences thereof. That is never covered. The only thing that in the contractual environment, and I'm glad to have my neighbor to see her nod because I don't want to see anything stupid, but that's the only thing that can't be bought back. But then it's all about price and capacities and about calibration of risk. The client wants everything, the insurer wants nothing, and the broker is in the middle. So it's about trying to find the middle ground between all and nothing. And we want to get a fee in the process as a broker. So that's a good motivator for us. But there you have it. Aside from nuclear, everything's allowed. But we need to find the right capacities and explain the business cases and calibrate risk. We need to price it accordingly. And above all, that's what I'll end on. This is a market, the aviation market as a whole, is not very proactive, unfortunately. As soon as there are a bit of money on the table, we'll start lowering prices because it's only lasted too long. But this is a market that's very reactive. As soon as something, as an event happens, you can see the price of war risk will go from 100 million to 1 billion in just a few underwriting events. So everything can be covered in a way. You simply need to find the right balance between supply and demand and adapt that to the price curve. Frédéric Denefle, for the maritime market, what about it? Well, we have more or less the same constraints when it's about atomic risk. There's no difference between aviation and maritime when it comes to the risk of use of a nuclear weapon. We're not going there and we can't cover. But then you've got conflicts that might happen between powers that are part of the Security Council. If you've got a conflict that breaks out between France and Russia, for instance, well, you're in a context where insurance companies use clauses through which they won't be involved in such a situation. And don't neglect that. And finally, in the previous discussion, it was recalled, you've got a lot of embargo situations, a lot of legally restrictive situations that has nothing to do with the risks I identified a minute ago, but they ban us from insuring a number of operations and exposures, but that are not war risk per se. What, for instance, that can be likened to conflictualization of international relations. So if you take everything that's going on, everything that was decided against Russian oil, and the setting up of a price cap for Russian oil, we transported Russian oil and we ensured that transport. Well, that has been turned into a retaliatory measure against Russia in order to limit its economic capabilities when it comes to selling its oil. So it's not war as such, but this is service provision that is seen as being support to the Russian war effort. And so we are prohibited from ensuring that. That's what you also need to keep in mind. The large number of embargoes and decisions in this area since the Obama administration in 2011. The first embargo that strictly targeted insurance and reinsurance was a decision made by the Obama administration in 2011 against Iran. Insurers and reinsurers were prohibited from insuring anything that would go to Iran, or that could eventually end up in Iran. Thank you so much for these clarifications, Beatrice. Let's look at the applications. Could you tell us of a couple of major UK decisions, recent ones?
Yes, so rather bravely, there was a judgment handed down very recently on the 11th of June in relation to the big aircraft litigation that's happened in the UK that involved lots of insurers from lots of different jurisdictions, and I think it's an interesting decision because it touches on elements of maritime law in kind of applying the law to the aviation industry, and it's very much the first decision of its kind in that sense. There were 6 actions brought by owners and lessors of aircraft that were in Ukraine at the outbreak of the Russian invasion. The judgment relates to 147 aircraft and around 16 standalone engines, and I think 1 or 2 other parts. The insured value was in total over $4.5 billion US dollars. So this is a huge claim, with a trial that took over 5 months and involved over 50 legal counsel. So just to give some idea of quite how big this piece of litigation was. There's a lot to cover in that 200-page judgment, so just to touch on some of the key issues that are relevant to what we're discussing today. One of the issues was whether the aircraft had been lost, and if they indeed had been lost, when and how that loss occurred. Specifically, part of the dispute was there was the all risks insurers and the war risk insurers, and they were disputing whether or not the loss was due to a commercial decision by the Russian airlines leasing the aircraft, or in which case the all risk insurers might be liable. Or whether an act or order of Russian government was the cause of the loss, in which case it would fall under the war risks insurance. The judgment concludes the aircraft were lost, and that loss occurred on the 10th of March 2022, which is when the Russian government issued Resolution 311, which banned the export of aircraft and aircraft equipment from Russia. Given that conclusion, the judgment finds that the war risks insurers were liable to the claimants. Quite an interesting element to the judgment was there was quite a direct comparison between the concept of a constructive total loss, which has its foundations in marine insurance, and the concept in aviation insurance. And the judge made some quite interesting comments about this. He did not apply the test for total loss by deprivation in marine insurance, so an unlikelihood of recovery is the term. And instead he held a loss by deprivation in non-marine insurance would be when the loss was on the balance of probabilities permanent. And in this example, permanent was defined as lasting for, and this is a quote, the commercial lifetime of the aircraft. So it rejected the idea for marine insurance that a vessel will be unrecoverable within a reasonable time. So it took out that kind of reasonableness requirement we see in the marine space. And he made it very clear by doing this that what a loss will be for the purpose of an insurance recovery under a war policy or otherwise will mean different things when applied to different properties. The judge did confirm, however, that the sort of death's blow, grip of the peril doctrine that applies to marine insurance does apply here. So if an assured is deprived of possession by an insured peril within a policy period, so in this case we're looking at, the insured perils under the war risks clauses, if that deprivation later develops into a permanent loss in a sort of unbroken sequence of events, an insurer remains liable even if that loss does not crystallize until after the policy. And this is interesting because, in the marine space, sometimes we see cases on detention and constructive total loss, but they're not hugely common. They don't often get all the way through to a trial, so there's not a huge body of case law on this topic. There was a case, as you speak about, Iran and Iraq called the Bamburi, which talks about was a vessel that was detained. But it is an interesting area of the law where we don't have a huge body of law to look at. So this judgment is very important, and it touched on all kinds of aspects of the law, particularly for aviation. So there were issues on whether the assured was able to recover under their contingent or possessed cover, and it was held that this fell under contingent cover. And there was also issues of payment in relation to US, EU, and US sanctions. So, it's a very important decision, and I think it's very apt when I was preparing for this conference that judgment had not come out. So, you know, it is showing that there is more and more law building in this area, and it's very important that we kind of all stay on top of it, particularly for common law jurisdictions where these decisions are obviously very important.
Merci beaucoup.
Thank you so much, Beatrice, Frederic, and Christophe. This case law, is that going to influence the drafting of policies on the French side? Well, as we said earlier, at that level of risk-taking, it's always the UK model, the body of UK policies that is used by everybody, because there's such a level of co-insurance and reinsurance that you need to standardize new wordings. If you're not going to standardize prices, you should at least standardize something, so it's the wordings. And so everybody is supposed to work on the same legal basis. So this ruling, as was said, is extremely important, because since the origin, the reading that professionals made in aviation underwriting, the reading was clear. You had all risks with exclusions and then buyback. And so for once you had texts that were fairly precise and well expressed, and that didn't leave any room for ambiguity. Here we're talking really the financial stakes that led clients to try and claim for all the possible guarantees and covers, because if everything had been aligned, if the war risk capacities and ordinary risk had been aligned, there wouldn't have been any reason not to use the cover that, well, Ukraine and Russia is a bit similar to war, so it was logical to use that. But here it was a legal debate that, of course, existed in the past, but it ended with a true answer and a true legal analysis. Of course, there will be appeals, so it's not a final judgment. Things can still happen as we speak. Things are relatively clear-cut, so policies don't necessarily warrant a revision. What warrants a revision is the level of cover, because as long as there's such a difference between what you can be recovered by a policyholder or a broker between ordinary risk and war risk, don't be surprised that there's going to be further litigation to get the money where it is. I mean, it's the deep pocket theory. It's always existed in insurance, and this is what we're talking about with this loss.
I don't know if you want to add anything just now to this, but otherwise, is there need to have some sort of legislative harmonization? Well, in as much as the parties to an insurance contract decide to have their contractual relations come under law of a certain body, in this case English law or British law, well, you have to say who is the competent authority. And in Britain, you have very specific practices. I mean, the testimonies in court is something that you have in British jurisdictions that you don't have elsewhere in Europe. In any case, in as much as you've decided British law is the one best suited to address possible legal disputes arising out of a insurance contract, well, you have to be consistent, apply British law, and then the British law will come up with a solution. I mean, you shouldn't say that once you have certain jurisdiction with a solution, that doesn't mean it will apply across the world. I mean, I remember I prepared a theme on decisions made in France on disputes related to war risk insurance. I won't get into the detail of that, but decisions were made by the Court of Appeals on fishing situations in war risk. There was another one on maritime risk, where once the parties decide to apply French law to their disputes and insurance contracts, well, then of course you go down that road, and you don't need to sort of align or harmonize practices from one contract to another. Listen, we're running out of time, but how do you analyze war risk when you have to provide general and maritime risk? Well, you have to look at the area where the ship is going to be exposed. When the ship is in risk zones, of course, that's when you look at this closely. But in general terms, you provide a guarantee against war risk, a fleet in general. And then you look at the conditions, applicable law, and then the situation of the ship owners. But when a ship enters a risk zone, there's about 20 such zones that were identified by the British market. We take this on board because we believe that system has shown its worth. I mean, and in fact, clients and brokers use it. But we're very careful once you're being asked to cover transit through one of these areas, see what capital is at risk. We see the level of conflict in the area and the extent to which this could have an effect on maritime transport, on the ship owners, therefore. And so we see to what extent we can advocate prevention measures, the market, the insurance market, and ship owners, partners organized to set up prevention measures. You have what are known as best management practices. You have support measures in risk areas. You don't spend too much time. I mean, that's an example. But in any case, that's the sort of thing that will enable us to arrive at an offer. Christophe Grabert, can you tell us, I mean, what are the most complex situations you've ever had to address? Well, right up until last week and before my next door neighbor referred to what happened. I believe the Ukraine, I mean, that claim involving Ukraine and Russia was probably, in economic terms, was the most significant one. Now, in legal terms, for an insurance company, we were not going to make the decision and we couldn't have much influence, but we were concerned about the sustainability of the guarantees if they were to be challenged by a ruling. That ruling, in a way, validates a format that had been designed by the largest number of players. Having said that, the war risk claims that we encounter in aviation are rather binary. I mean, it's either or. I mean, I'll give you 4 quick examples. Tripoli, Libya, that was the largest, apart from the one we just discussed on Ukraine, Russia. At the end of Gaddafi and everything that happened, I mean, you had aircraft exploded on the Tripoli airport. That was a case of war. Sri Lanka, a similar situation where you had, that's earlier on, but you had a civil war there, and then you have airports being exploded. Malaysian Airlines, you remember, I mean, this airline suddenly overnight found itself with 2 planes shot out of the skies, one over Ukraine, back then already, and the second one, first we didn't quite know what happened, but in the end it disappeared altogether. And it was, and then German Wings, a suicidal pilot, decided to crash his plane into the mountain. So, of course, there are not many situations. I mean, unfortunately, these are fairly simple cases, in fact. Well, we won't discuss, revisit German Wings, but that wasn't, that was hijacking. So as part for insurance, that is war risk compared to the, I mean, this is I mean, even though it was a German Wings employee, this was what we called an air pirate, an act of piracy. But it was quite acceptable and accepted indeed in professional circles. Okay, we just have a few minutes left for the 3 of you. How do you see the development of war risks insurance for the next, say, 5 years? Frederick? Well, I said it 3 years ago already. You have to keep in mind what we're experiencing now. Every conflict should be considered, analyzed, and see how we communicate to customers who need insurance and tell them why they need it and to the extent of the financial limit we can extend. what we're seeing now, and a large explanation of what we can see, will explain what we'll do in the next 5 years, because we are situations of conflicts that people claim openly, and so insurers will have to address this and adapt this. Beatrice, can you tell us how you see things evolving over the next 3-5 years?
Yeah, I think the market will become, it's very difficult to say. I think that there are some changes that will have to be considered by the market. So cyber being one of them is just a hugely growing space. How do you deal with, potentially an AI hijacking, for example, of a vessel or a plane, and things like that are very difficult to write into the cover as it stands, and I think that is something that insurers are really going to have to be thinking about. I think there's also going to be potentially a rise in litigation, especially following the big decision we've just discussed. I think that claimants are realizing more and more that potentially there is scope to kind of fight these claims rather than just settle them and walk away, and that might lead to a lot of legal uncertainty. As my neighbour said, that decision could well be appealed many times in the UK to the Court of Appeal, then potentially the Supreme Court. So, there is a lot of uncertainty, and I think that particularly the kind of sanctions cyberspace there's so much scope for things to happen that we haven't yet thought about. So the way that's going to be put into policy wording is, to me, very unclear at the moment.
Merci beaucoup d'avoir répondu.
Thank you for a clear answer, and okay. I'll just say I have a dream. Is that Paris Matt, and this is something I've mentioned before. I hope that we can create a market. I want to take the position of our British friends, but I think we'll need everyone on that on war risk. All the major capitals and economic centers will have to chip in, and the Paris in the marine and aviation insurance is well respected. In war risk, we are dwarves. We are running behind our British partners, and so I don't mean to challenge what is, after all, a well-developed market, but we'll just need to add capacity simply because our customers will need that. Well, thank you to all three of you for having come here and given us a landscape of the position.
Voilà. Cécile, je vous rends la parole.
And Cécile, yes, well, thank you. By way of conclusion, the time has come for lunch. It's a sit-down business, and just you pick your tables with your best friends, either outside or in the lounges inside. And for those of you who ordered a vegetarian menu, you should collect a little flag that indicate that you have a vegetarian meal, and we'll meet you at 2:30 sharp for the continuation of the event.